Hi guys, and welcome. It's G-Economics here, and you join me once again for a GCSE economics video for the pre-release stimulus material June 2018. So having shown you where to get the stimulus material, having talked a little bit about the introduction, now I'm going to just tackle slide by slide really the theory which you will need to know in order to answer what I think will be the likely questions for this particular pre-release material. So ladies and gentlemen, I'm going to start today looking a little bit about trade, because trade is mentioned in the introductory paragraphs of the stimulus material. So as you know, the title of this particular stimulus is Challenges for the World Economy. Is economic growth sustainable? And then it goes on to talk about world trade and economic growth. So I thought we could just, by way of a little bit of background, just talk a little bit about trade, because that feeds into this whole notion of the current account position and whether or not we've got a trade surplus or a trade deficit, and whether or not then protectionist policies are appropriate. So what's trade? So trade is a means of acquiring goods and or services which a country does not possess. We, for example, in the UK, do not have a wealth of natural resources, and therefore, of course, we need to import many of them. Copper, for example, from Zambia would be a good example. We do obviously produce some oil, although not a lot, and depleting as the days go by. But because we do not produce everything that we need, we bring some in, and the things which we are good at, we tend to export out. And so there's that trade continuously going across national boundaries. The second thing it says about trade is that trade it's always been important for the UK. Think about the UK and particularly its geographical location. I'm thinking particularly about the most recent David Smith article, where David Smith is referencing the fact that we as an island nation are ideally located geographically to trade with 500 million customers in the European Union, and yet we are floating off into the Atlantic and trying to negotiate trade deals with other countries with lower populations, fewer goods and services that we need, and probably worse terms of trade. But anyway, that's by the by. The point is that we're an island nation and we need to bring things in and we need to export things. Now, in recent years, and certainly in the past 60 years, say from 1960 to 2016, the importance of trade within our aggregate demand and our GDP has become more and more important as the decades have gone by. Those of you who study economics, I'm sure even at GCSE level, you'll be familiar with the whole notion of the aggregate demand equation, consumption plus investment plus government expenditure plus net exports, that X minus M component, which is our trade. Well, that now in the UK accounts for, in terms of its proportion of trade to GDP, it's around about 60%. And there's a little link here which I'll very briefly show you. So this is a World Bank statistic, this being the 1960 figure and this being the 2016 figure. And this, again, is the proportion of trade to GDP. And you can see that this has gone from 42% to 58%, almost up to 60%. So it's becoming more and more important, this whole notion of trade within the UK economy for our growth and development and standard of living, I suppose. And then the other thing to mention on this is, it mentions in your pre-release stimulus material about world trade growth growing more slowly since the 2007-2008 financial crisis. Now, we're talking 10 years ago, so that's obviously you'll have been primary school, most of you, who are about to undertake this exam. But of course, that's known as the Great Recession, which is the most significant recession in post-war history. And if we look at the data behind this, we can see how world trade has actually declined. It bounced back after the financial crisis, but subsequently growth in world trade, whilst it is growing, it's very important to note that, it is still growing, but the rate at which it's growing is slowing. So let's just have a look, ladies and gentlemen, again at this data. So this is a World Trade Organization document which I have Googled. World trade and GDP growth in 2016 and early 2017. Quite an interesting document, ladies and gentlemen. This is an interesting chart here. Let me just zoom in and make sure that you can all see this properly. I hope you can. So, ladies and gents, the time series on this is from 1981 through to 2016. And we can see here the very significant depression as a consequence of the Great Recession. And this blue line here is the percentage change in world trade volume growth over that particular time period. Now, obviously, as you would expect in the Great Recession, it contracted significantly, almost down, so you're talking 13-14% contraction. Significant bounce back in the aftermath of the financial crisis, but looks what's been happening subsequently. Subsequent to that recovery, then world trade growth is starting to decline. So although the rates are still positive, they are declining rates of growth, which is what your extract is actually referencing and talking about. Now, the interesting thing on this document is that it goes on to explain just some of the reasons why that actually is. So I'll read a few sections of this for you, ladies and gentlemen. So it says, in 2016, world merchandise trade recorded its lowest growth rate in volume terms since the financial crisis of 2008, exactly mimicking what it says in your pre-release, with an increase of just 1.3% as measured by the average of exports and imports. This low level of expansion was half as strong as the 2.6% increase recorded in 2015 and well below the 4.7% average annual rate since 1980. Now, it then goes on to identify a couple of reasons why. Now, you don't necessarily need to know this, but it's always good background. So, partly due to continuing weakness in the global economy, with economic activity slowing in both developed and developing countries. Also reflecting structural changes between trade and growth. The most trade-intensive components of global demand were particularly weak as investment spending slumped in the United States. And China, obviously China's been responsible for not only exporting huge amounts, but also importing. But that reliance on that net exports, the Chinese authorities have been trying to rebalance their economy and move away from that, and consequently that has declined within their own economy, which obviously impacts world trade as a whole. So it's an interesting read, that, ladies and gentlemen. I'll not go on and labour that point, but that's all I really wanted to say at this point. Just a very quick introduction here with regard to trade and what's been happening to trade. Obviously, by all means, Google these particular documents yourselves, you can have a closer look. That's it, ladies and gents. As ever, feel free to contact me, geekonomics.co.uk/contact, and I'll see you next time. Bye.